Hello and welcome to another video segment from oldschoolcharts.com. And as you can tell by this title page, it looks like we're soon going to become freechartvideos.com. Still using the old school chart methods, but I just found out this a couple days ago that freechartvideos.com was an available domain name. And quite frankly, I'd be crazy not to snag it up, so I did. This video is for educational purposes only and is not intended to be any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. I am not a licensed professional, and I'll add to that, I'm just a guy who draws straight lines on charts. Let's look at Ford Motor Company. Okay, this is about 3.5 years of data on Ford. We're going to take actually a longer range view of this in just a bit, but this shows us what we need to see for right now, and that shows this ugly bottom that really was kind of a double bottom. You can see that when that broke out, if we just go straight across here, we got the expected action of the breakout, the pullback. You see that that red hammer candle right there, and then a breakaway gap. Actually, a breakaway gap and another one. And after that got established, it appears to me that that Ford really got into some channel action here. Let's draw some trend lines. There we go. And let's put one on top. This one isn't going to be perfect, but you can see Ford was going in a fairly well-defined channel, and then it broke down, came back for a back test, came back, came up, made a higher high, and now a higher low. So let's kind of see what's going on right in this region, because this is really kind of more immediate to what you might be looking at as far as a trade opportunity. And what strikes my eye right away is the fact that we have two peaks that are one slightly lower than the other on this break, but now the price has come back over this trend line. I take that as a bullish sign, and I think that Ford may, if you keep your eyes on it, if this comes back and tests this line, and then we see strong evidence of support, and maybe a really short candle, maybe some investor indecision showing up as we hit this line, that may be a real nice place to put a trade in. We can also draw a trend line here that should also act as some support. So really we have two opportunities of support. We've got this top line. I'm going to make it purple. And then we've got this bottom line. I'll make it red. Okay. You see that after this broke, we did have a pretty good back test. If you look at this dip, and this dip, you know, I hate to say it, I feel like I'm Johnny One Note, but it looks like, with the exception of this peak actually having made that line, this again is looking kind of like a little inverse head and shoulders, where you've got a dip, a larger dip, and then a smaller dip, and then a breakout. We have not yet had the pullback. Now here's what's kind of interesting. If we measure the depth of that head right here, and we add that to the point of the breakout, we end up with a price target of about $17. Now obviously it's not going to make it right here, because it's going to happen at some point down the road, and I'm thinking, you know, at some point it just looks to me like the price is going to move back maybe for another tag on this line. What happens there, I don't know for sure. But the setup right now is for Ford to hit roughly 17. Let's go back to a really, really long-term chart, and I want to show you something that is almost ridiculously amazing. Okay, we're looking at actually a kind of a strange interval. We're looking at a 9-day chart, and I want to just show you something that I saw the other day that I thought was just too cool. First off, I want to show you how if you were in Ford and you were a chart reader, I want to show you where you could have maybe gotten a little nervous. There's your tops. There's your bottoms. As we try to draw something that constricts this almost 10 years of trading. The price broke down here, came back into this large triangle, then broke down, pulled back, and really suffered a pretty bad fate. Here's the cool thing. If we measure the height of this pattern at this, I'm just kind of going for the average height here. That should be about the expected down move if this triangle broke down. And I want to show you something. With the exception of that probably one long candle that that happened in late 2008, look how predictive that was. Again, this would be the minimum expected move out of that pattern. It came down, came back, did the little double bottom. Now it's gotten back on top of the pattern. I don't know that we can say that now we put that measurement up here. Quite frankly, I'm not comfortable doing that. I think we need to just watch it on that smaller time frame. But I guess what I'm trying to say is, if you'd been looking back at 10 years here and you saw that weakness when it broke down to 5, if you had been a chart reader, you know, you might have gotten out a little early because you wouldn't have known that it would have rallied back to 8. But on that second break and pullback, you could have said, wow, you know, this thing is going to hit the ones. And I wonder how many people actually thought that as it was happening, or when Ford was right here. But you can kind of see how that chart rule pretty much played out the way it was supposed to. Anyway, I hope you've enjoyed this segment. We'll be doing more as time allows, and I'm trying to put up a chart or two every day, at least for the next few months. So good trading to you, and thanks for watching. Go check out my website when you have a chance. And that's at freechartvideos.com. And for right now, you can also get there, oldschoolcharts.com. They both go the same place. Take care.